is that you've been hammering on this level over and over again. This is back in June, in late June, or excuse me, this was, June, in early July, in mid-July, and then over here in September. And look at what's happening on this candle today off the Fed. It looks like we're starting to break lower. Yeah. So I think that's the big thing. And this was a shock to the US equity markets, is you basically got the 75 basis point hike, which everyone expected. That was not a surprise. But the statement was unbelievably hawkish, in fact, guiding the market that they're even going to continue to be aggressive into year end, basically upping where they're saying interest rates will be by year end. And that shocked the market. And this was such a wild day, because that statement alone dropped the market precipitously. We saw about a 2% drop in the S&P in the matter of 20 minutes. Then Jerome Powell did his press conference. And in the press conference, he kind of was ever so slightly open to letting economic data dictate. And all of a sudden, the market just ripped higher. And we saw the markets go all the way to new highs of the day. So now we've rallied basically up 3% to the upside. Now, all of a sudden, the markets started to redigest what he's been saying. And they're like, wait a minute, we're not going this way. And the market sold off and made new lows of the day, basically dropping over 3%, ending at the lows of the day. It was a day for the ages. And I'll show you guys here what the chart looked like on an intraday basis. This is the 10-minute chart. You can see starting here, it was real quiet. So all day long, everyone was just waiting. Here's where the statement came out. And so we were up on the day. This is where we closed the previous day. So the markets were up. We sold off from 885 down to 820 on the S&P. So, I mean, that was a big drop, $65 drop, or 65-point S&P drop. We then rallied all the way back above 900 to 907, and then closed down at 3789, 3790. So one of the wildest days I have seen in the equity markets in terms of whipping the markets. And again, it sets us up for just probably a pretty crazy day tomorrow, where the markets are trying to really figure things out.
Can we figure things out? I mean, you said the Fed's hawkish. Where to from here?
Yeah, I mean, this is the kicker, right? And I've said this before. I think the Fed to me has always been behind the curve, whether it's when they're printing money when they really shouldn't be, or when they're tightening out of panic because of inflation in this scenario. And I really, if I could talk directly to Jerome Powell, I would say be very careful here, because now you've raised 3 times in a row 75 basis points. You're guiding that you're probably going to raise another 50 in November at least, maybe another 25 into December. And we haven't even seen the full effects of the higher rates yet. Right? So the economy still hasn't digested all of that. And you have to be careful here, because with interest rates, rising and inflation still high, if we go into a bad recession, and let's say we go into a global recession, which it looks very possible we will, how do we get out of that recession? If you think about it, every past recession, the Fed's printed us out by lowering rates, quantitative easing. But with inflation at, let's say, even if it comes down to 4%, they're not going to print us out. They can't, because it would send inflation soaring again. So it's a very tricky scenario, and I think the market is starting to be really nervous about that aspect. So nothing's changed, unfortunately. In fact, the hawkishness of the Fed is exactly what Bitcoin doesn't need right now, and it's pushing it lower. So if I show the Bitcoin chart here, what we can see is that you've been hammering on this level over and over again. This is back in June, in late June, or excuse me, this was, June, in early July, in mid-July, and then over here in September. And look at what's happening on this candle today off the Fed. It looks like we're starting to break lower. Now, we will have a little support at the June low of 17,500, but if that gets broken, then there's not a lot of support until you get to like 13 to 12,000. And I think it's looking more and more like that is going to be the ultimate outcome here. Oh, yeah. So for me, there's no question that it will exist. The question is, how long does it take to get regulation out there where institutions start to feel comfortable investing in it? So there's always going to be this need and this trust that Bitcoin, there's a run of 21 million. And so therefore it's not the fiat currency that is the US dollar, is the yen or the euro or any of these other currencies that the governments can just print nonstop when they want to stimulate. And so I think you have to look at it like that. And you have enough big money, you know, the Michael Saylors and a bunch of other players that have drawn enough attention to it. And then you have countries like El Salvador that have adopted it as kind of a currency there. I do think that it will survive, but it's going through its .com bear market, right? So if we think back to the .coms, you know, you had the Amazons of the world. That stock went from, you know, from basically 112 to about, I think it was about $6 or so. So a 95% drop. And it's very likely that we're going to see that on Bitcoin. The fact that people are saying, they're beginning to say, oh, it's not going to be in existence anymore. That's exactly what I want to start to hear to believe that we're close to a bottom. I don't think we're at the bottom yet. But when you hear more and more people saying that, because by the way, they said that in 2018 as well, after the highs in 2017, it was 20,000, it went down to 3,500, and you had tons of people saying, oh, forget about it, it's old, it's done. And then what happens? It goes to 69,000. So you look for those contrarian indicators. And again, the belief is there's enough young people, especially, that understand the fiat currency issues out there. And they are into the digital age now, where they're not just looking at gold, but they're looking at these other, you know, currencies, essentially cryptos. Yeah, so to me, it's not so much of a concern because, you know, a digital currency is still a fiat currency in that the Fed can then just click a button, kind of like they do now, and probably just print another $1 trillion or €1 trillion or whatever. And so the allure to me for Bitcoin is that it's that digital gold. So gold is a great, awesome commodity. I own a fair amount of physical. I'm invested in it currently as an investment via the GLD. And I like it because of that aspect. It's kind of a safe haven aspect. And I think that Bitcoin is becoming more and more of that. So it's going to kind of separate itself. And then if you look at where Ethereum is and where some of these other cryptos are, they've got a big use case, right? They're being used for things, building platforms on top of platforms. And I think that's the key too, is I want to actually see Gary Gensler kind of come out with okay, these are securities. Okay, they're securities. That's fine. Make them do legitimate reporting, legitimate like audits. I want to see that. That's transparency. That's a good thing. I'm not so concerned about the decentralization getting kind of taken away because they have a use case. And so to me, like an Ethereum is almost like a Google or a Apple. And I think that's what it becomes, of more of a security, while Bitcoin is more the digitalized gold. And then you have the central bank currencies, which are just created to kind of do transactions back and forth. And the government obviously still has control of that.